With all the chitter chatter in the news about the feds lowering the Fed funds rate, I've had so many questions about clients asking me, when the rates are going to drop and are the rates going to drop a quarter point or half point when the feds lower the rates? And the truth, it might surprise you. My name is Amy DeBusk, and I am known for making mortgage simple and easy. I've been a certified mortgage planner for over 26 years. And the truth of the matter is, that mortgage rates are probably lower right now than they will be when the feds lower the interest rates in a few weeks. And let me give you an analogy that might explain why that is. So let's pretend that you are at a horse race and you are betting on this horse. And there's all these odds of how fast the horse is going to go, who's going to win. When you place your bet, you're going to make the most money before the race, not after the race, right? There are no bets after the horse race. It's all happening before the race. And whoever bets closest to who wins and by how much wins the most money, right? So it's the same way with mortgage-backed securities. The way that the bond traders make money is the guess on what the rate is going to be before rates change. So they are making trades before rates are dropping. What moves the interest rates is supply and demand. So on days when everybody is buying a lot of mortgage backed securities, the rates are going to be lower. On days when they're selling them because they think rates are going to go up, the rates are going to go up a little bit because it's supply and demand. So it's all about the horse race and who's going to get the right bet first before the feds lower the Fed funds rate. And just to explain, the Fed funds rate is not the 30-year mortgage-backed securities. The Fed funds rate affects the daily bank rate that banks charge each other for lending money. It's going to affect for you, it's going to affect your prime rate on your equity line of credit, your credit cards, and your CDs. So, what the prime rate is on whatever a bank is advertising is going to be directly affected by the Fed funds rate. So, how do the Fed funds rates, how does that inadvertently affect the 30-year mortgage? It's like a ripple effect. So when the Fed funds rate drops, it ripples into other sectors in the bond market. So eventually, yes, the Fed funds rate does affect the effective rate of the 30-year mortgage. But the day that the Fed funds rate drops, that is not the day that the rates are going to be the lowest. The rates are going to be the lowest before the Fed funds rate drops right now, like a couple of weeks before, because nobody knows what's going to happen. And so all these bond traders are placing their bets and seeing who's going to be the one to get it right. So I encourage you to check out rates right now. If you're thinking of refinancing, now's a great time to get a quote and see if it makes sense for you to lower your mortgage payment. And then if you are thinking of buying a house and you're wondering what rates are in relationship to how much you can qualify for or what that payment might look like right now, please log on to talkingwithamy.com and we can talk about all the things related to interest rates and how it's going to affect you and your mortgage.